Hello everyone. I said I was going to drop a video on our next topic, which is demand and supply, and we are going to look in how it functions in the market. And I'm going to show you some practical example before we go into the market, as we did in our previous and first video also. So as you can see, we'll start from what demand is and what supply is. I encourage everyone to have a journal. I've always said it from my first video till now, to journal your trading journey, because when you journal it, you have things to fall back on, things to look at, things to reflect at, to keep you going. So demand simply means where you buy, in the sense that when you demand for something, you want it. And when you go to the market, just like forex market is also like going to the market where you buy tomatoes and stuff like that. Just that it is more smart. Like, people in the market are very smart. They know how to play. They know how to play the market more than we that are just newbies or learning how to trade. So when you go into the market to buy, it means you demand. When you go into the market to sell, when you go to the market to sell, it means your supply. So when you demand for something to buy that particular product, it reaches a certain extent whereby after meeting and after agreement, the seller is now ready to supply those things. Just like you can see here, after the demand, there comes the supply. After you buy, it gets supplied to you. After you buy something from me, I supply it to you, I sell it to you. So the broker is the channel, like the middleman. Your broker is like the middleman. When you place a buy, your broker helps you to buy it. And when it gets to a certain point, you want to sell, your broker still help you. It's like the middle chain they're like the middle chain in the market. So we have fixed demand. Demand is where you want to buy. Supply is where you want to sell in the market. So without wasting much of our time, so we can make this video, because it's just a particular topic I'm trying to point out. It's just like our support and resistance, but in this particular case, you mark the demand zone and you mark the supply zone. It's not like support and resistance, whereby you can just mark a zone. It might not consist of some factors, but in marking your demand and supply zone, you must see, let me list them for you. It must lead to a break of structure. I meant to list that down, but I prefer you to write it down. I'll take it slowly. It must lead to a break of structure. I'll list the one I know and I know works. It must have an FVG, which is what they call fair value gap, showing imbalance. It must have an FVG. So any demand or supply zone you are seeing does not lead to a break of structure or does not have an FVG, count it as is not a demand or supply zone. You can mark it as support and resistance in price action, but when talking about ICT, you can't call it a demand or supply zone. The demand supply zone must have imbalance, fair value gap. It must break a structure either to the upside or to the downside. That's how to mark your demand and supply zone. Like you can see here now, this particular spot here, from this point down to this point, that's our imbalance, that's our fair value gap. This is where our fair value gap lies. We'll see that in the market. This is where our fair value gap lies from year to year. It's showing that market will still come back to fill that particular space. Any space that has not been filled up in the market will definitely come back. Market will definitely come back to fill up that space. It is a must. It might not come back that same day, but in the nearest future, it is going to come back to fill up that particular space. So like you can see, I said this place is the fair value gap. they might, let me now narrow it down to this point. I just created this part to be able to identify those points for you. Imagine a trade going up here, just like you can see here. Let's twist this down, this particular spot here. Let's say this is it here. Imagine the trade returning back to this particular zone, and you're marking out a support, your support here, and you don't know that there's a supply zone at this, above this point. Market might tend to respect the support and sell a bit down, or sell very low. But in same sense, if hedge funds, bigger banks come in and see a supply zone, especially when they come from an higher time frame, they tend to leave. Sometimes they tend to leave this support zone you see here to come and hit this supply zone instead of hitting your resistance zone. Sorry, instead of hitting your resistance zone, which is meant to be here. Let me draw this out. Maybe you have a resistance zone here or a supply zone here, any of it. Hedge funds might just come and say, this is a supply zone, or this is a resistance zone. Let's leave this out. Let's come and hit this supply zone here. This supply zone tends to be stronger because if market should come out and hit here and respect the supply zone and reverse back, it's going to be a very strong sell because it has swept out liquidity. We have not gone into liquidity yet, but it broke a structure here to the upside, but we'll see it as a kind of liquidity sweep. They respected the supply zone and sold down back to this support, or to this demand zone. Sorry, sold back to this demand zone. So what are we looking at here? Like I said, a supply zone, you must see either a supply or demand. You must see fair value gap. You must see a break of structure. As when we go to the chart, we'll see that it is going to break a structure around here before it comes down here. Let me do something like this. Imagine it coming from here. Okay, let me do it like this. It must lead to a break of structure, as you can see, and it must have imbalance around this point. It must have imbalance around this point, and it must lead to a break of structure also, which is here. So definitely when you know price reverse, is either going to respect it or it might break out. We don't know where the perfect POI is, but during persistent training, if you see something like this, market reverse back, and it's coming back, and you see something like this, you might take this and also take this depending on your account size. But if you want to feel more safer, you take this one above here because it's a sweep. There's the most possibility that market is going to break out from this one here and come and respect this, then pull back down to give it that reasonable hour. So if you say we want to sell from this point, say we want to sell from this point down to this place, we are putting our stop loss above this one a bit. See, it's giving us 2.79. That is almost 3 out of our risk. Let me cancel this off. So you are still going to give you more profit when it comes to this zone than are we going to be here. If you check out this one now and you want to put your stop loss, you might want to put it above here because you are selling early, so you want to be risk free. So after that, Let's move to this demand zone here. We have cleared the supply. I hope we all understood that. If you don't understand, you can leave me a comment in the comments below, or you can see my WhatsApp number on my YouTube channel. You can inbox me on WhatsApp or TikTok. My social handles are open there, so you can inbox me whatever you don't understand. We can clear that out. So moving on, we are seeing this demand zone. Market came down here to this demand zone. After hitting this demand zone, it swept to liquidity a bit. I'm going to move to this liquidity because I see it as something that happens very often in the market. Market tends to stop out early buyers or sellers and still go your direction. It happens very often, and we are going to treat that because we are all learning. I always say that since I started these videos, I started my YouTube classes, I will use that word. We are all learning. So whatever experience I see, I bring to you. I don't mind you bringing your experiences to me because I can learn from you, you can learn from me. But I'm doing this video particularly for people that don't know exactly what this is or what the forex market entails. I'm breaking it down bit by bit to your understanding. So the market made a small sweep over here, and what happened? It's pushed up after breaking small sweep over here. Around this point, you might tend to see a break of structure. To this point, you can put your buy stop. So once market breaks that structure, it buys up. Or you can wait for a reversal just like this into the little demand zone. You might say demand zone here or support. It's mostly like to be a demand zone. Into a little demand zone here. Then you put your stop loss around this point. Just stop loss around this point because you have to allow your trade to breathe. Then you put your TP around here. So what is it giving us? 2:6. That's our risk to reward is like 2 times 2 of our risk. So it's a very good trade. So that's that for that. We have checked out how the supply and demand zone work because it's just like support and resistance. But what did I say? Either the supply or demand zone, it must have an imbalance, FVG, that's your fair value gap. It must break a structure. It must break a structure. I know that if I want to start FVG, prices, market is going to come and fill up those spaces. So most times when I mark my supply and demand zone, I'll show you in the market. I mark in my demand zone, I mark the last bearish candle before the upward move. Which upward move? The upward move here. Sorry. For the upward move here. So let's just focus on this. So I mark out the last bearish candle before the upward move. You can pen that down. But everybody knows how to mark out their demand zone and their supply zone. But for me, I use the last bearish candle before the upward move. Why for my supply zone, I use the last bullish candle before the downward move. Before this downward move here, I use the last bullish candle. There are still many more confluences that you need to learn before you execute a trade. But I can't just say that all on here because, like I said, I'll teach you the basics. Is for you to learn a strategy for yourself to use to execute trades and add up maybe mine and the ones you have learned from maybe your mentor or anyone else. Then make yourself an expert in trading. Not an expert. No one can be perfect. But make yourself very good when trading, whereby your profit is more than your losses. So like you can see, what happened here when price came back to this same supply zone, it sold down. I did this arrow because sometimes when price comes to your demand zone, it either pulls back up to buy. That's why you have to wait to see maybe a break of structure or your candlesticks, maybe an hammer, a bullish engulfing to confirm market wants to push up before you execute. Don't just say, okay, price enters my demand zone, I'm going to buy. So after that, price might feel it wants to push down just to stop out people that bought early. So waiting for a big structure is very bad, and sometimes it can still break structure and go back downwards. So you just have to be convinced that you are following your strategy. Wait for a big structure or look for your candlesticks. If market go against you, you know that yes, I did what was right. So that's what most traders do. They wait for big structure, they wait for candlesticks on the lower time frame to dictate when they are going to enter the market. So what happened here? Market can break below, and this demand zone might become a resistance or a supply zone, whereby price might just come, hit it here, and continue going downwards. Price might break down here and continue going downwards. So there are many things that can happen in the market. But even before I take this trade, I wait for confirmations again, even if it breaks out. I've seen a big structure, just like if you watch my video on BTC, you see what I said there. Just like a big structure, then wait for another, after this market structure shifts, and I wait for another big structure to confirm that yes, it has reversed to the downside. Then I take my entry from there. So let's move into the market to see what we have done. So our trade from last week on USDJPY give us 2.75. If you watch my previous video, you're going to see when I explained on the BTC entry, and I didn't do much on other trades, but I emphasized on the BTC entries. So you can watch my previous video to understand that too. So let's go with the supply first. So what happened here? This is a supply zone, as you can see closely. I told you I mark mostly the last bullish candle before the downward move. And as you can see, this is the last bullish candle that led to an imbalance. And what I tell you, you must see an imbalance, an FVG, and a break of structure that you can see here. A break of structure and an imbalance, you can see. So market going to come back to fill this point. So what happened after I marked that out? Market came back to fill this point, sold down to this demand zone, because this is a demand zone. This is the right demand zone here. But I'll call this a breaker block, or it has been filled up. So this is the right demand zone here. It broke structure here. So if I want to put my TP, I'm going to put it over here. This is the imbalance, the fair value gap. This is it here. So this is it. So if I want to put my TP, it's going to be here. So let's now see what it gave us if we sold from this point. Putting our stop loss in the previous high, putting our TP here. So what is it giving us? 3.58. So that's our risk to reward is times 3 of our risk. So as you can see, this is a good trade. So I would like us to always observe all this before we put in or take any trade. So let's look at that of the demand. I marked that out too. So this is the demand. So what do we say about marking our demand? We must see a break of structure and an imbalance. As you can see, I marked out this demand. But I see a break of structure. I saw a break of structure here. but market reversed and filled up this our FVG. So you know this FVG is no longer valid, but the demand zone hasn't been tapped yet. It's still a fresh demand zone. So after this break of structure here, wait for price to reverse into this demand zone because it has not been tapped yet. So when price reverses into the demand zone, what happened? Price bought up, even though it came to tap into the demand zone again. It shows that demand zone is strong. That's why it tapped into it and rejected with this week here. So our TP is going to be this supply zone here. So like you can see, we are entering from this point and putting our stop loss slightly below this demand zone and our TP right here. So what is it giving us? 2.64. That is times 2 of our entry. Is also a good entry. So this is where our entry is going to be. So I took it to that point. No, yeah, sorry. This is where our entry is going to be because this is where the demand zone is, and this is where it pushed. So this is the reversal. So market pushed, then gave us our TP at this point. Sorry about this drawing. Let me just use this and give us our TP at this point. So that's for that on demand and supply. It's not that hard to mark out if you stick to what I said. Learn to mark and check the features to make a demand zone valid. Break of structure, and you must see a fair value gap. That's the two I will tell you to always watch out for. And before you take any trade from a demand or supply zone, make sure after it has been tapped, depending on your account size and how sure you are on that trade, wait for a break of structure either to the downside or to the upside, depending if it's a supply zone. Wait for it to break structure to the downside, maybe once or twice. Then when it pull back, buy on the retest or set a sell stop to take you in when it wants to break another maybe a new structure. So that's just it, and that also entails the demand zone. Wait for price to make a new break of structure to the upside before you enter. As you can see at this point, as price made this break of structure, it reverses back. If I want to take this trade now, I'll wait for it to break structure to here, then buy from this reversal. And if I see possibility that this because this is a 15-minute time frame, and I see possibility that on the 4-hour time frame there's no supply zone here on the 4-hour time frame, I might just extend my TP above, because I mostly respect the 4-hour time frame to set my TP than the lower time frame. But I can set my entries on the lower time frame, but my TP is going to be very wide on the higher time frame. So that is that. So any question should be dropped in the comment section, or should be referred, or should be addressed or sent to me on my WhatsApp or TikTok handle, which have been placed on my YouTube. So thanks for watching, and I know this analysis and knowledge we shared on here is going to inspire you and make you make progress in your trading journey. Thank you so much, and God bless.